Fears mount over a potential default in Washington. Lawmakers are still unable to strike a deal, and the deadline looms even closer. We'll have the latest. Plus, the price of milk spikes in India as the world's largest producer faces a combination of lower yields and rising costs. Hello and welcome to Asia Business Report. I'm Monica Miller. We start in the United States, where fears of a potential default are growing. Lawmakers are struggling to reach a deal on the country's debt ceiling, with the U.S. House Speaker Kevin McCarthy saying on Wednesday that negotiations remain far apart. Our North America business correspondent Michelle Fleury gives us the latest from New York.
There's a roughly 1 in 4 chance that the U.S. will hit the so-called X date. That's when the government runs out of money to pay its bills, without a deal to raise the debt limit. That's according to the banking giant JP Morgan Chase. And they say the odds are getting worse. That forecast comes after House Speaker Kevin McCarthy said on Wednesday that he thought progress could be made, but warned that the two sides remain far apart. Republicans are demanding that any deal must cut future federal spending in exchange for raising the debt ceiling, a red line for the White House. On Wall Street, U.S. stocks fell as investors have been watching these talks closely for any sign of an agreement. And even if a deal is done in time, economists say that, depending on the details, cuts to government spending are likely to create economic headwinds that could bring down inflation. A possible silver lining for the Federal Reserve, which has been raising interest rates to fight inflation. Fed officials are still debating whether to raise interest rates or hold them steady when they meet in June.
Now, that was Michelle Fleury in New York reporting. Now, the debt ceiling brinkmanship has resulted in a credit rating agency, Fitch, placing the U.S. AAA status on Ratings Watch negative. A note released on Wednesday evening said that Fitch is the latest to update that reflected the increased political partisanship that's hindering a resolution to raise or suspend that debt limit. Now let's turn our attention to the U.S. Federal Reserve, where its latest minutes show that Fed officials are still undecided on the outcome, or the outlook rather, of interest rate increases. The aggressive rate hikes in the U.S. last year had put pressure on central banks in the region to keep up. So what does this latest Fed minute mean for interest rates in Asia? I spoke to Diana Musina. She is the Deputy Chief Economist at Australia's AMP. Earlier, she said that we are getting very close to the peak of interest rates for many major central banks in the region.
Well, I suppose the biggest risk is really around future rate hikes and the potential for those rate hikes, because the sentiment over the past few months across most global central banks has been one where we're seeing central banks really take their foot off the brake, and we are getting very close to the peak in the level of interest rates. And for the majority of the major central banks, we're actually looking at only potentially one more rate hike, if really any. But the risk here, and the talks from central bank governors in the US over the past week have indicated that the risk is still with another hike in the US and maybe across other regions as well, because inflation is proving to be harder to reduce than expected, especially around things like food inflation. We saw that in the UK inflation data overnight as well. So while the risk is with another 1 or 2 hikes, I think that we are very close to the end of the global tightening cycle.
Are we out of the woods when it comes to a recession? Talk of a recession in this part of the world.
I don't think that we're completely out of the woods on that. I think that the global economy has a big risk of going into recession sometime in the next 12 to 18 months. That's a very large time horizon, but the recession odds just keep getting pushed back because the global economy actually turned up at the beginning of the year. So I think recession risks in 2024 are quite high. I'd give it about a 40 to 50% chance that the global economy will be in a recession.
Now, shares of NVIDIA have spiked in after-hours trading. The jump comes after the chipmaker issued a better-than-expected forecast when it released its quarterly earnings on Wednesday. NVIDIA's shares have already been trending upwards this year over optimism of the company's leading position for AI-related chips. NVIDIA is a leading maker of chips used for video games and cloud computing applications. The Chinese Commerce Minister Wang Wangchao is expected to meet the U.S. Trade Representative Catherine Tai later this week. Mr. Wang is scheduled to meet Ms. Tai on the sidelines of the APEC ministerial gathering scheduled for the 25th and 26th of May in Detroit. The expected engagement comes after U.S. President Joe Biden said at the G7 summit in Hiroshima this past weekend that the focus is on de-risking confrontations with China, not decoupling. In this context, de-risking is meant to be a slightly more moderate approach to reducing reliance on trade ties with China while protecting national interests and technological advances. Earlier, I spoke to Frank Lavin. He is a former U.S. ambassador to Singapore, and he told me any meeting between the two officials will be a good gesture.
Well, I think it's an important gesture. I think it's a useful meeting, but boy, businesses are all recalibrating their China exposure, in part because of the political tension and because Chinese economic growth is slowing down a bit. But look, it is still the #2 market in the world. So businesses have to take China seriously, in my view.
I mean, the new term that came out of the G7 summit is de-risking, not decoupling, which seems to dial down a bit of that tension that was there. You know, how are other APEC members, though, working to balance the relationship between the U.S. and China in terms of their own concerns?
In the Southeast Asia region, the ASEAN countries, the mid-sized markets, I think China tends to be their #1 trading partner, and they're very adverse to any kind of political friction or trying to take sides between the U.S.-China dispute. So their view is both the U.S. and China remain important markets. They don't want to step on anybody's toes.
What are the main issues that really need to be discussed at this two-day meeting?
I think from the Chinese side, they were unhappy with these extra tariffs that President Trump originally posed and President Biden retained in place. They're also unhappy about some of the chip policy and some of the tech policies that they view might harm Chinese industries. And from the U.S. side, the U.S. has been chronically unhappy about access to markets and what the U.S. views as unfair trading policies that China tends to have one of the highest tariff rates of the major economies. So it's harder for U.S. Companies to sell into that market.
That's former U.S. Ambassador Frank Lavin there. Now, I want to go to India, where milk prices have risen by about 15% over the course of last year. From the consumer to the dairy farmer, everyone has been feeling the pinch. The BBC's Arunaday Mukherjee finds out what is ailing the industry in the country as the world's largest milk producer, contributing to a quarter of all the global output.
Tucked away in the heart of Old Delhi is this 80-year-old shop. Its claim to fame, traditional Indian milk sweets. It sees a steady stream of customers through the day. But with milk prices on the boil all through last year, business has simmered.
Our profits are down. Customers are now buying half the quantity of sweets compared to a year ago.
India's food inflation is primarily driven by cereals and milk. And in the world's largest milk-producing nation, import of milk and cream has gone up by over 40% in the last 2 years. Travelling 100 kilometers outside Delhi to neighbouring Haryana, the reasons become clear. Turkpur was once a village of dairy farmers. Until 2 years ago, Krishan Kumar Dahiya had run a thriving dairy farm for 2 decades.
Our cattle were falling severely ill and dying. Buying new ones is very expensive, and the cost of fodder had also doubled.
Nearly 200,000 cattle died of lumpy skin disease in India last year, stemming the flow of milk production in the country. Industry experts say the actual number could be higher. Dairy farmer Karambir Singh admits it's been tough to keep his business afloat. Supply chain disruptions post-COVID, coupled with climate change, has meant cattle feed now costs twice what it did 2 years ago.
I had 2 employees, but I couldn't afford their salaries, so I let them go. I too am thinking of leaving this business.
No loss, no profit.
A majority of the farmers of this village are slowly switching from dairy farming to regular farming. But experts say it's very important to maintain the health of the Indian dairy sector because as per government estimates, it employs nearly 80 million people and is worth around $121 billion. According to major players, India's production is still below global standards, and a lot can be done to make dairy farming profitable.
The Indian dairy farmer gets only 10 to 15 litres of milk per cow per day, but the same cow abroad will give 28 to 32 litres of milk. We need to accept global practices and invest more in research and development.
To do that, experts say the government should ramp up vaccinations for livestock, help regulate fodder costs and provide dairy farmers an assured income for their output. Otherwise, being the world's largest milk producer could come at a steep cost. Arunodaya Mukherjee, BBC News, Turkpur, Haryana.
That's all we have for you here on Asia Business Report. I'm Monica Miller, but you can always keep up with the latest news by visiting our website, bbc.com. Thank you so much for joining us.